Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to go through a few charts of interest for the week ahead. Now we have to remember it's a very heavy news week. We have an ECB interest rate announcement, the FOMC Federal Reserve rate announcement, and we also have the UK general election going ahead this week. So very heavy news week where we could see a lot of key levels come into play. We could see a lot of impulses and a lot of exaggerated moves. So this week is going to be a little bit of a quiet one in terms of trade sort of signals or trade sort of ideas that we'd go through. But the trade ideas that we will look at will be kind of staying away from those sort of currencies. So euro dollar have marked up a few areas of key interests to me. In particular, what we saw last week was the market reject these recent swing highs around about the 1.1094 level. We did have a level in here previously where we said you could look for a rejection from this level for a potential move to the downside. Now, the problem we have here is obviously the FOMC rate statement comes first. If the Federal Reserve hold a dovish tone, we could see the dollar fall, which could push euro dollar back up to these weekly swing highs around about the 1.1180 area. Now, if the market finds resistance at this point around the time the ECB announce their rates, then we could see a drop from there. So what I'm kind of looking for is a potential break above these swing highs in here, a push towards that 1.1180, and then when the ECB begin to announce their rates and head towards their press conference, we should see a drop. Now, that could be one scenario we look at. Another could be that the market or the Federal Reserve have a hawkish tone and mention growth or anything about continuing hikes in 2020. We could see the dollar gain value then, and if that happens, then euro dollar is going to come and test these key lows around about the 1.1 area. Okay, so keep that in mind as well. The market could easily drop here, break through and test these weekly lows as well. So euro dollar, a few key levels to just watch throughout this week. Don't necessarily jump in on this chart, but you know, if the market does come and reject the key weekly lows and highs, that could be a good area to look for some potential moves. Pound, obviously, got to talk about the pound. Last week we spoke about the seasonal trend on the pound and the fact that through December it tends to be very bullish, especially pre-election cycles. So we're looking for the trend to continue here. There was a commitment of trader signal short around about this 1.3 area, which is why we were looking for the market to potentially break 1.28 and head towards that 1.2580 high back in September. But we didn't get that. The market came towards that 128, rejected it, broken through this 1.3, and we still sit above that level. So what we're looking for really is if the market can push back down to these supporting levels around about the 1.3, we could look for long opportunities into 1.33. Now, 1.33 is the yearly highs. And typically, when the market tests a yearly high, it will reject it. So if we see the market just stall here until the UK election, and when the results are announced, we could see the market rally or drop. So if we see the market rally towards that 1.33 area, it'd be interesting to see what happens, whether we see the market break above and close back within. If we do see that, then I'll look for shorts on the pound at this level with the targets of 1.3 in mind. Obviously, if you're just looking at seasonal trend, then you're going to be looking for longs from 1.3 anyway. But just be aware that it is the general election in the UK. We could see some wild swings in this market as well. A market that I actually really like is Kiwi, and the reason being is we've been on a nice move up recently, which we spoke about all the way back down at these lows through here. The market rallied nicely we've broken through some key levels, and now we're back at this recent weekly swing low around about 6,560. The market's had a very strong close at that level. Typically when that happens, we do see a bit of a rejection the week after, so I'm looking for some kind of reversal setup now. You can see on the daily time frame that we've mapped out the recent daily breakout highs as well, around about 6,460. If the market can pull back down to that level, that's where I expect trend continuation. So I'm looking for a counter trend move to get back to that point. If I go down into a 4-hour time frame, you can see here that I mapped out some bearish divergence. So what we're seeing is the price form higher highs and the RSI form lower highs. Okay, so that's giving us a bit of a bearish divergence signal at this key resistance level where we could see the market pull back. So I'm looking for some kind of indication that we are going to see some downside. So if I just grab a pen tool quickly, what we can look for is a potential double top scenario. So that would look like something like this. If the market rallies up back into this high, breaks through, then I'd look to short on a double top neckline, and then look for the market to target this key level down in here. So that's what I'm going to be watching on Kiwi dollar. Keep an eye on that this week. Kiwi should be relatively okay to trade. Obviously you've got the dollar counterpart on that, so be aware that Wednesday could be a pretty big day for this currency pair also. So I'll leave it there for now. I hope you enjoyed this video update. If you did, please like and subscribe to the YouTube channel for more trading content. Thanks, and I'll speak to you soon.